You've probably never heard of the most important company in the world, but it's sitting at the absolute center of the AI revolution, and they just dropped a number that's turning heads everywhere.
Yeah, that's it. 30% plus. For a company this big, that is a huge number.
So what is that? Well, according to a brand new analyst note from Morningstar, that is the revenue growth TSMC is expecting. And get this, it's fueled by just one thing: artificial intelligence. The AI boom isn't just some abstract idea, you know. This company, they're the ones literally building the engine that's making it all happen. So, that makes TSMC the undisputed king of AI chips. People talk about the AI gold rush, right? Well, these guys aren't just selling the shovels. They're pretty much the only ones on Earth who know how to forge them in the first place.
Okay, so how did they get here? To really get how they became the king, we've got to take a step back and look at the digital world they basically built from the ground up.
All right, the first thing you have to know is that TSMC is what's called a foundry. It's actually the world's largest. Just think of it like a master workshop for silicon. They don't come up with the blueprints for the chips themselves. No, they build them for everybody else.
And when I say everybody else, I am not kidding. We're talking about the biggest names in tech. Apple, AMD, NVIDIA, they're all what you call fabless. It means they design the brains, but they hand those designs over to TSMC to actually make the thing. That iPhone in your hand, your gaming PC, even the huge servers running the AI you're hearing about. Yep, all powered by silicon made by TSMC.
And look, we're not talking about a small lead here. As you can see on this chart, TSMC controls something like 70% of the entire contract chip market. Let that sink in. That level of dominance is, well, it's just staggering.
So the big question is, how did they build this fortress? And maybe even more important, how do they keep everyone else out? The Morningstar analysis has a great way of describing this. They call it an economic moat. And the wording here is super important. Morningstar doesn't just say they have a moat. They call it a wide economic moat. Now, that's a rating analysts do not hand out lightly. It basically means a company's advantages are so powerful, they're like a giant wall around a fortress, keeping competitors out, not just for a little while, but potentially for decades.
Okay, so what is this fortress actually made of? What are the bricks and mortar that make it so tough for anyone else to even try to compete?
Well, the analysis boils it down to three main pillars. First up, their technology. It's just light years ahead of everyone else. Second, they're so huge, their scale gives them an unbeatable cost advantage. And third, and this one's really interesting, is customer trust.
That technology lead kicks off this amazing, self-feeding loop, what you could call a virtuous cycle. They create the best, most premium products, right? So they can charge premium prices for them. Then they take all that profit and dump it straight back into R&D. And what does that do? It widens their technology lead even more. It's a cycle that competitors just can't seem to break into.
Now let's talk about that third pillar, trust, because this is a real game changer. See, unlike rivals, think Intel or Samsung, who also sell their own branded chips, TSMC is totally neutral. They don't compete with their customers. This is huge. It means companies like Apple and NVIDIA can go to them with their most secret, next-generation plans, and they know TSMC isn't going to steal their ideas. That trust is an absolutely massive competitive advantage. But, no fortress is ever 100% secure. There are always challengers trying to scale the walls, which leads us right into the big debate about this company's future.
And here it is, the two sides of the coin. You have the bull case, the optimistic view, which says that TSMC's moat is just too wide to cross, their tech and scale are just unstoppable. But then you have the bear case, the more pessimistic side, which points out that competitors, especially Samsung and Intel, are throwing billions of dollars, a lot of it with government backing, to try and catch up.
This table from the report really puts it in black and white, doesn't it? Even with all that money being spent by the competition, Morningstar's verdict is clear. TSMC gets a wide moat rating, and its two biggest rivals, Intel and Samsung, none. That's a pretty stark difference.
And this all leads to a really fascinating conclusion from the analyst. What you're seeing here is, on the one hand, TSMC, the dominant leader, is actually considered undervalued. And then on the other hand, one of its main challengers, Intel, is seen as overvalued. I mean, that's about as clear a statement as you can get about who the analyst thinks is going to win this race.
So, when you weigh the strength of the fortress against the challengers at the gates, where does the analyst ultimately land? What's the final word, the bottom line on what this company is actually worth?
$428. That is the fair value estimate that Morningstar has put on TSMC stock.
And compared to where it's trading today, well, that suggests there could be a lot of room to grow.
And so the final conclusion from the report is pretty straightforward. The stock looks attractive. Why? Because it seems like the rest of the market is just too worried about those competitors. The analysts think the world is fundamentally underestimating just how strong TSMC's fortress really is.
Think about this for a second. We're heading into an era where the most advanced chips are becoming the single most critical resource on Earth, maybe even more valuable than oil. And right now, one company has something close to a monopoly on making them. So the real question to leave you with is this. It's not just about whether TSMC can keep its lead, it's about whether its true era of dominance is really just getting started.